Okay, hello students. This is Lokesh here, and then we have marginal costing chapter of costing. Let us look at today one more aspect compared to our marginal costing, and that we are talking about absorption costing. So absorption costing is a practice of charging all cost, that is both variable as well as fixed, to operations, products or processes. Remember, there is one more type of costing which we have studied, that is marginal costing, which will distinguish between fixed and variable cost and will take only variable or marginal cost into account for all the products, processes and all the decision making. But this is a system, absorption costing is a system where we talk about both the variable as well as the fixed cost, that is nothing but the total cost. Okay, so that is the way it goes. So what are the advantages of absorption costing? So absorption costing avoids the separation of cost into fixed and variable, as I told you earlier, and it ensures that all the costs are covered. See my dear friends, in case of margin costing we take into account variable cost, but there may be a good portion of fixed cost which are left in decision making, so that may affect the organization's costing part. But this is not a system like that. It's a system where we take both the cost into account, so we will not leave fixed cost and take only variable cost. And then it matches the cost and revenues of a particular accounting period. So this particular system, as it takes both the fixed as well as variable cost, it will look at the entire cost and then compare that cost with the revenue which is incurred earned during the particular accounting period. Okay, so this helps the organization to determine what exactly is the profit derived from the product or processes or a department. Okay, then the apportionment and allocation of fixed production overheads to the departments makes departmental managers more aware of the cost and services provided. So if we take only marginal cost, the departmental managers may not be very serious about the cost, because they may identify that cost is very less. But if you take both the cost into account, and then the cost amount will increase, that will act as a caution for the managers. Fixed costs are absorbed in stocks too. So in case of stocks, the fixed costs are also absorbed. So absorption costing helps in preparing income statement for external reporting and tax purposes. So when you are preparing financial statements, that is income and expenditure statement or profit and loss account and balance sheet, which will be used for tax purposes, and it is also referred by public for various purposes. This particular system helps because they will look at the complete cost, not just one aspect of costing. Okay, but this particular system is also not free from limitations. So what are the limitations, we will understand. So the overheads charged to the production are not accurately or precisely measured, but only apportioned on some basis. I think in the second year you have studied about apportionment of cost, right? So there is primary distribution, secondary distribution, where you distribute the overheads on a particular basis. You distribute overheads on a particular basis. Okay, so when you distribute or apportion the overhead on the particular basis, it's on some logical conclusion on a particular basis. It's not that you are 100% accurate on apportioning the overheads. Okay, so that is a problem in case of absorption costing, and the basis of overhead absorption is selected by the management. So what is that basis is selected by the management, so there may be a problem. So arbitrary way of apportionment of overhead reduces the practical utility of the cost data for control purpose. So when you do that, one particular basis you take into account and then you distribute the overheads, you may not get a right picture, and so the effect of entire absorption costing is a questionable when it comes to control purpose. So these are some of the limitations, and then there are a lot of limitations also covered here, but we will not discuss it in detail because when we talk about absorption system, of course, they say that system is a system where full costs are taken into account. Let me may take one or two limitation from all these 10 limitations which are there. So cost volume profit relationship is ignored. See, in case of marginal costing, we understand the cost and profit in relation to the volume. So we take into account the volume of output or the output into account, and then we will see what is the changes in volume and what is the changes in cost and profit. That is impact of changes in the volume on cost and profit is measured. So that is not done in this particular case. So these are some of the limitations, but rather than just pointing out the limitations only, let us look at the distinguish point between these absorption and marginal costing. So it is a practice charging all costs. So absorption costing is a method where we charge all cost into account, but marginal costing takes only variable cost, that we have discussed. So stock of finished goods and work in progress is valued at total cost, which includes both and fixed and variable, but here it is valued only at total variable cost. So the arbitrary apportionment of fixed cost often results in under and over absorption of overheads. So what you do is you take now, for example, in the fourth semester, you studied about apportionment, absorption, and then non-integrated accounting system, where you get a term under absorption and over absorption of overheads like manufacturing overheads, factory overheads, then selling and distribution overheads, etc. And ultimately, you take that into costing profit and loss account. But such things are not there in this particular system, as it excludes fixed cost, and the question of arbitrary apportionment of questioning, it does not arise only. Okay. Then managerial decisions are guided by profit, which is excess of sales value over the cost. So it is decisions are almost taken on profit basis, but this particular case focuses on contribution, which is sales and variable cost difference. Okay, contribution, all of you know, PV ratio we take into account. It is more realistic when different products receive widely differing amount of attention, but it is favored simple processing situation which all products receive similar attention. Okay, and it avoids danger of understanding the importance of fixed cost, but decisions on marginal costing may concentrate on only sales, not exactly on the costing part of it. So this is absolutely difference between absorption costing and marginal costing. So we have marginal costing, which takes into account variable cost into account for products, processes, and department, but we have absorption costing, which takes into account the entire total cost for calculation purposes. So this is all about absorption and variable costing. So dear friends, here are some of the formulas which we have discussed in the this thing. So remember, always remember, basic structure of marginal costing is sales minus variable cost is equal to contribution minus fixed cost is profit, and PV ratio is profit volume ratio, BEP is break even point. So BEP in sales, how do we calculate? PV fixed cost divided by PV ratio. BEP in units, contribution by fixed cost per unit, contribution per fixed cost divided by contribution per unit. Profit, how do we calculate? So PV ratio minus EFC. So then it is PV ratio into margin of safety. Okay, fixed cost PV ratio into BEP, and PV ratio into S minus P, that is contribution. So variable cost S minus C, अथवा sales minus contribution, or sales is equal to sales 100 plus PV 100 minus PV ratio. Okay, variable cost. Sales, all of you know, desired sales also calculated like that. Margin of sales is actual sales minus break even point. Okay, so all these are some of the concepts related to marginal costing. So with this I will conclude this particular session. Thank you.